it's something that they want to buy a house, well then they need to know how much is it going to cost to borrow that house, and the rest of their lifestyle has to be adopted to suit it.
Yeah.
Not simply, this is my lifestyle and buying a house and owning a house has to fit into it.
And funny, this was a conversation I was having with my partner yesterday. Is it a case of that when I go to buy a house, it should be kind of, I should be leaving myself a bit of breathing room so that I don't max myself out with, a monthly payment straight away, because if the interest rates increase, I'm already maxed out.
Yeah.
I have no breathing room here. So should it kind of be a case of, let's look at the figures. Say, for example, I could afford £600 a month.
Mm-hmm.
Do I go for something, say, for example, and 600 is max? Should I go for something that's maybe at around 450 or £500? I don't know, like these figures could be completely off, but for an example, go for something at 450 or £500, and that gives me about roughly £100 breathing space, so that if they do fluctuate, I can absorb that kind of mortgage cost. Would that be like a sensible outlook on it, or?
Buying a house, it's like, and running a house, it's like running a business. And this is where a lot of people get it completely wrong. Quite rightly, as you say, some people just think, right, at the minute, I can afford this much of a monthly payment. But running a house, that's what I said at the start there, it's all about the running costs. If you maybe have an older house or it needs refurbed or needs work done to it, that's more money that you need.
Yeah.
So every month you should be sitting down and basically have enough to cover all the bills, still have a life, and a bit of socialising and a bit of fun, and basically you need to factor in contingencies. You need to be able to cover, for instance, if the Bank of England decide to put up their interest rates, and will that have a knock-on impact to your mortgage? Can you afford it? But ultimately, what about as well if you become sick, or you lose your job, or there's a redundancy, or you're off sick, you could fall and slip and break your leg very easily.
Yeah.
And if you rely on every single penny coming in every month, and that stops for a month, and you don't have anything to pay your bills, the whole thing comes crumbling down. Having an economic background, I have a passion and enjoy the economics. You'd said there about you didn't know whether the interest rates were going to go up or not. All the experts were saying that they had to go up. I was predicting that they were going to go up. In economics, a sustainable, good economy runs at a 5% interest rate, whereas we had interest rates at less than 1% for years. So knowing that knowledge that at some point interest rates had to come back to that, I appreciate for just people have no knowledge of that, they're not going to look about it. With the economy, with finances, the financial market, every day, every month, has different things factoring it, and if you're not watching it, you don't know what's happening. The problem is the media occasionally jump in on different areas.
Well, this is something that, and you can see it obviously nearly every time that every month with the Bank of England currently, with the way that they were raising interest rates, it was like headline news, Bank of England raises interest rates. But if you don't understand what that is, that's daunting.
Yeah.
It's just like, it's at 5%.
It's all about affordability. You have to nearly like having a crystal ball, even though there's no such thing. If you're just working and you're just covering all the bills when you buy the house, what about if the sofa breaks or the washing machine breaks, or you need to change your car? Where's all that money going to come from? So unfortunately, if you can't afford it from day one and you're stretching to make it work, it's not for you.
Yeah.